Good morning, traders. Today we want to discuss Wall Street trader reveals power of proprietary support and resistance level. Wall Street trader reveals power of a proprietary support and resistance level. In this tutorial, I want to talk about the short-term equilibrium price level. The short-term equilibrium price level is a technical fair value for the financial instrument that we want to buy or sell. All right. So over the year, I always want to know, for instance, to know exactly, the short-term equilibrium price level for a financial instrument. I want to know the fair value, the technical fair value of a financial instrument. All right. So the short-term technical fair value for any financial instrument is the short-term equilibrium price level. This is my own proprietary trading tool. I have discovered a formula to determine exactly the short-term technical fair value for any financial instrument. The short-term equilibrium price level is an essential support or resistance level for day traders and swing traders. All right. So if you are day trading or swing trading in the currency market, in the futures market, in the stock market, it is essential that you know exactly the short-term technical fair value for that financial instrument that you want to trade. All right. So in this tutorial, we want to reveal to traders, the power of a proprietary support and resistance level. All right. So on my chart here, I'm looking at the Dow Jones Index. All right. The short-term equilibrium price level, or the current short-term equilibrium price level for the Dow Jones, is the pink horizontal line on my chart. It's at 17848. As you can see, we see a deviation, the price deviates far away from the short-term equilibrium price level, all right, and then it tries to pull back near that, short-term technical fair value. But it did find support at the high of the last quarter, all right, so the last quarter is, if we go to the quarterly chart, for the Dow Jones Index, we are talking about the high of this candlestick bar, which is the last quarter or the last quarterly candlestick bar on the quarterly chart. The high of that candlestick bar is near, it's not the exact level, it's near the level of 18146. So as you can see, there was a deviation from the short-term equilibrium price level or the short-term fair value of the Dow Jones, all right, and the price tried to pull back near its equilibrium, its short-term equilibrium price level, but did find a support near the high of the last quarter. All right. What I've said to traders so far is that one should give priority to bearish signal below the level of 18615. Priority to bearish signal below 18615, and priority to bullish signal above that level. All right. If you want to understand, or if you want to know exactly how to trade the Dow Jones at this junction, I would like to recommend a video. The title of that video is Dow Jones Trader Explains His Dow Jones Trading Tactics at 24 Stock Trader YouTube channel. Digit 2, digit 4, Stock Trader YouTube channel. You can YouTube search that video that we title Dow Jones Trader Explains His Dow Jones Trading Tactics. All right. So at this point in time, all I want to say to traders, the short-term equilibrium price level or the short-term technical fair value for the Dow Jones is at 17848. There is a deviation from that short-term equilibrium price level. The price tried to pull back near that level, but did find a support near the high of the last quarterly candlestick bar. Priority to bearish signal below 18615, and priority to bullish signal above that level. If If you want to understand exactly how to trade the Dow Jones Index at this point in time, you need to check out the video that we titled Dow Jones Trader Explains His Dow Jones Trading Tactics at 24 Stock Trader YouTube channel. If we look at the first 15 15 component of the Dow Jones Index, I want to show you also the short-term equilibrium price level for the first 15 component of the Dow Jones Index. All right, we are looking at the ExxonMobil stock, which is one of the components of the Dow Jones Index. The short-term equilibrium price level, if one is day trading or swing trading this ExxonMobil stock, the short-term equilibrium price level or the short-term equilibrium price level or the short-term fair value for the ExxonMobil stock is at 9075. What we are looking for trading setup around the short-term equilibrium price level when we are day trading and or swing trading. So the best way to use the short-term equilibrium price level is to look for trading setups in the vicinity of that short-term equilibrium price level when we are day trading or swing trading. Another thing I need to clarify with traders, if we see a deviation, as you can see here, a price move away from its short-term equilibrium price level, there is a high chance that the price will try, if the deviation is valid, the price will try to return back to its short-term equilibrium price level. If it did below it, so there is, you see here, there was a deviation from the short-term equilibrium price level, and then a pullback to the short-term equilibrium price level. This is what we call return to the mean or return to the short-term technical fair value. If it did below that level, we measure the height, so from the short-term equilibrium price level to the high point of the deviation, we project it down if the price break below it, and then we set our target here. So for somebody who understands how to use the short-term equilibrium price level, we see a deviation above that short-term equilibrium price level. There is a high chance that the price, if the deviation is valid, that the price may try to pull back near the short-term equilibrium price level. If it did below the short-term equilibrium price level, we measure the distance from the short-term equilibrium price level to the top of the deviation, and we project it down to set a target. As you can see, that's exactly where the ExxonMobil did stop. All right, this is the power of a proprietary support and resistance level. All right, so for those who are day trading or swing trading the ExxonMobil stock, the current short-term equilibrium price level is at 9075. That level will remain in place for 2 weeks or so. The next component of the Dow Jones is Chevron Corporation. The EPIC is CVX, Charlie Victor X-ray. All right. The current short-term equilibrium price level for Chevron, a component of the Dow Jones Index, is at 103.10. All right, I'm not going to dwell on it, so just note it down. We're looking for trading setup in the vicinity of the 103.10, or you will see a deviation. As you can see, once again, we see a deviation from the short-term equilibrium price level and a pullback to the short-term equilibrium price level. Price D below the short-term equilibrium price level, we measure that distance and we project it down to set a target. As you can see one more time, this is the power of a proprietary support and resistance level for the, as you can see for Chevron, it has been an excellent tool for trading Chevron, all right? So we want, if we are day trading or swing trading for the next 2 weeks or so, we want to remember that this level, 103.10. The next financial instrument or the next component is Coca-Cola. The AP is KO, Kilo Oscar, and once again the short-term equilibrium price level or the short-term technical fair value for Coca-Cola is at $44.49. All right, once again you can see here there was a deviation for ups above that level, 44. Okay, I'll leave it there. I'm not going to calculate that again. There was a deviation from the short-term equilibrium price level, and then we measure the distance to put it down again. Okay, the next component that we want to look at is Procter & Gamble Corporation. The EPIC is PG, Papa Golf. Another Dow Jones a component, and the short-term equilibrium price level is at 8588. 8588. Here there was no deviation as such, so we will be looking for trading setup. Here there was a good one here. If I breaks above the short-term equilibrium price level and then try to retest it here, and the common center line is kaput. For day trading purposes, we'll use a top-down trading method or a multiple time frame trading method to trade it, and then here it is going up a bit. Will it pull back again to retest the short-term equilibrium price level? Remember the level of 8588 if you are trading Procter & Gamble Corporation, EPIC, PG. The next component of the Dow Jones Index is Apple stock. The short-term equilibrium price level or the short-term technical fair value for Apple stock is at 10181. 10181. All right. So, for instance, if you are bullish, okay, and you want to buy Apple stock, you see a bullish trading setup, you want to buy it near the 10181. So we are looking for trading setup in the vicinity of 10181. Here we see a deviation from the short-term equilibrium price level. If this deviation is valid, there is a high chance that Apple stock will try to pull back to the 10181. And if you break below it, we measure the distance from the short-term equilibrium price level to the the top of the deviation, and then if it is below the short-term equilibrium price level, we project it down and we set another bearish target right here. In all cases, we are looking for excellent trading setup, and then we implement a top-down trading method to trade it, multiple time frame trading method to trade it. For those who are new to us, all right, if you do not know what is a multiple time frame trading method or a top-down trading method, you need to check the videos at 24 Stock Trader YouTube channel, where I'm busy talking about top-down trading method strategy. Multiple time frame trading method, okay, is the same thing. So whenever you see videos from 24 Stock Trader talking about top-down trading method or multiple time frame trading method, is the same subject, okay? All right, so for Apple stock, we see a deviation. Will it pull back to this level here? All right, will it break below and reach this level, 9475? So the short-term equilibrium price level or the short-term technical fair value for Apple stock is at 10181. In fact, I am the only one who knows how to calculate the short-term technical value for any financial instrument, and I'm not prepared to reveal that formula to anybody. The next component that we are looking at is United Health Group. The EPIC is a UNH. All right, this is another Dow Jones component. Okay, talking about Wall Street, we are talking about Dow Jones Index. All right, so the short-term equilibrium price level for United Health Group Incorporation, the EPIC Uniform November Hotel, is at 14178. The price now in the vicinity of the short-term equilibrium price level. So here, if you want to be bullish, all you need to do is to put a line at the high of this candlestick bar on the daily chart. You see here. So the price did find a support near the short-term equilibrium price level. Now he achieved this high. So in this case, if he's going to be truly bullish, he must break above the high of this candlestick bar and find a support. Break above, retest, implement multiple time frame trading method to take it up, whether you are day trading or swing trading. If it did below this level, break below, retest, we are looking for trading setup in the vicinity of the short-term equilibrium price level, and then we implement a top-down trading method. If there is a deviation, there is a high chance the price, if the deviation is correct, is valid, the price has a high chance to return to the short-term equilibrium price level. If it continues to go down, we use the projection to measure how far it will deviate on the other side of the short-term technical fair value. The next financial instrument is Walmart Store Incorporation. The EPIC is WMT. This is another component of the Dow Jones Index. Dow Jones Index or Wall Street, all right, is the short-term equilibrium price level or the short-term technical fair value for Walmart Store. For the next 2 weeks or so, remember the short-term equilibrium price level will remain in place for the next 2 weeks or so. We also have long-term equilibrium price level. So very shortly, I will be reposting videos at Joe Trio YouTube channel when I will be talking about the long-term equilibrium price level for the Dow Jones, for the Nasdaq 100, for the Russell 1000, for the Russell 2000. So stay tuned at the Joe Trio YouTube channel where I will be talking about proprietary trading and giving traders the the second, so at the beginning of the year, I gave traders the first, okay, long-term equilibrium price level. Now it's time to give traders the next long-term equilibrium price level for the Dow Jones Index and all the indices. So stay tuned, please. All right. So talking about the short-term equilibrium price level of Walmart store is at a 7355. 7355. All right. So we are in the vicinity of that short-term equilibrium price level. It's good for us. So if you want to buy, we implement a top-down trending method because the price is above it. If it dip below it, we implement a top-down trending method to sell it down. All right, you can see that the price is also, so when we are talking about one trading method, do not forget everything that we have said before. Do not violate the market pattern. The price consolidating between the level of 7433 and the level of 7284, and we have between those two lines the short-term equilibrium price level. All right. So this is about the Walmart store and the short-term technical fair value, talking about proprietary support and resistance level. We are talking about the short-term equilibrium price level, or the short-term technical fair value for Walmart is at a 7355. Next component of the Dow Jones, talking about Wall Street, all right, the short-term equilibrium price level for McDonald Corporation is at a 122.75, $122.75. All right, so there was this deviation. Look carefully. There was a deviation from the short-term equilibrium price level. All right, there was a deviation, and now the price pulled back near the short-term equilibrium price level. As it did below it, we implement a top-down trading method to sell it, and we will set our greedy bearish target somewhere here and say maximum profit target this point, half point profit target somewhere in this point. So we are at a half point profit target, 119.56. He reached the ultimate target in this zone. Now it's near the midpoint target at 119.75. So the short-term technical fair value for McDonald's stock is at a 122.75. If one is day trading or swing trading, one must know, very important, okay, the short-term technical fair value of the financial instrument that we are trading. The next component is Boeing. The APIC is Bravo Alpha BA. This is one of the market leaders for the Dow Jones Index. All right, and the short-term equilibrium price level for Boeing is 131.74. All right. The next component is Traveler, the Travelers Company Incorporation. The APIC is a TRV, Tango Romeo Victor. The short-term equilibrium price level, or the short-term technical fair value that day traders and swing traders must watch for the next 2 weeks or so is at a 117.15. 117.15. Okay, all right. The next financial instrument that we are looking at is Visa. You use credit card, Visa Incorporation, EPIC V. V for Victor. For Visa, we have the short-term equilibrium price level at 7719. 7719. You can see that there was some time. For some time, the price has been acknowledging this level. So you can see there was a deviation from the short-term equilibrium price level. And here it is. So this is a significant short-term equilibrium price level because it pulled back to that key level. And then there was another deviation below it on the other side. It deviates again on the other side, going down. And again, it pulled back to retest that short-term equilibrium price level. So you can see many times there was a deviation and the price came back to retest the short-term equilibrium price level. So in this case, it's become clear to us that this level of 7719 is an essential, short-term equilibrium price level for a Visa stock because the price is just retesting that level many times. Each time when there is a deviation, now we have a deviation again. Will it return to the mean? Will it return to the short-term equilibrium price level or short-term fair value at a 7719? All right. Normally we say priority to bullish signal above the short-term equilibrium price level and priority to bearish signal below. As we are day trading, we are looking for valid trading setup in the vicinity of the short-term equilibrium price level. Also, we are looking for deviation from the short-term equilibrium price level. In all cases, if there is a deviation, all right, there is a deviation, okay, you draw the common central line, okay, you are looking for, so here, so if you accept that as a common, in fact, I will accept this one. Okay, so if you draw it like this, we'll call this one the common central line for this. This is the common central line for this Visa stock. So it D below it, and then it retests it here. Okay, so it D below it. But normally, you can see that the price went down all the way here. There is a gap here. There's a gap. You see how the price, where the price did open, there is a gap here. Gap up to retest this level. Now we have another line. So we can put this one on our bearish watch list because there's a deviation. Or we can say we can draw a line here like this, like a warning line, saying that priority to bearish signal above 8014 and priority to bullish signal above. So if there's a bearish trading setup here, we take it down and we will step by step. All right, doesn't mean that it will definitely come back and retest it. This is not a magical one. Doesn't mean that anytime we have a deviation, definitely the price will retest it. No. All right. If it's not coming down, it's not coming down. If it's going up, though it's above, if there's a deviation and the price still finding the support continue to go up, it means that after 2 weeks we will have a new short-term equilibrium price level. So financial instrument, that are dynamically bullish, that are creating more value. So you may see sometimes something like this. So don't use the short-term equilibrium price level like traders are using the stochastic, all right, oversold, overbought. No, don't do that. So if, for instance, there is a deviation, all right, and the price did not come back and retest it, but in fact found a support somewhere else. Okay, so there is increase in value, didn't come back and retest it. Continue to go up. After 2 weeks, we will have a new, after 2 weeks or 3 weeks, we will have a new short-term equilibrium price level. Therefore, we will pay attention to the new short-term equilibrium price level. That's why I say to you, the current, as we are speaking today, I'm recording this video today on the 13th of August 2016. So today, the current short-term equilibrium price level for Visa is at 7719. After a few weeks, if the price continues to exhibit new higher high, and it changes a bit, we may see a new short-term technical fair value. All right, so do not consider the deviation. If the price always the deviation pullback, it's not going to. If there's a deviation and all the time we have a pullback, the price is not going to go anywhere. But that's why the short-term equilibrium price level is dynamic, is changing. After 2 weeks, normally we should have a new, a short-term equilibrium price level, all right? But sometimes a short-term equilibrium price level may remain in place for some time, for some time, even longer than 2 weeks. So after 2 weeks, we check it again, we calculate that short-term equilibrium price level, the short-term technical fair value, and if nothing has changed, we may have exactly the same or just a little bit of change. So sometimes you may see that is. So following week, you may see now we have it at 7719, and then following week, if there's not much change, you may see at 7745, and another week maybe a little bit above it, all right? So just remember that, It is my own proprietary trading tool, but I'm giving it here, I'm giving, those proprietary support and resistance level to traders that are trading the component of the Dow Jones, talking about the Wall Street, Dow Jones Index, Wall Street, all right, to those traders that are day trading, so they may watch those short-term equilibrium price level. And if there is a valid trading setup, as I'm showing you here, you may take advantage of it because it is essential for day trader and swing trader to know at least, the short-term equilibrium price level or the short-term fair value of the financial instrument that they are trading. Remember that this is not part of any TST trading system. I do not sell it. I do not, give it to anybody else. So don't think that it's part of the TST trading system. It's not, So for the American Express, EPIC ASP, all right, Alpha S-Ray Papa, the current short-term equilibrium price level or current technical fair value is at 62.22, all right, so $62.22. That's the short-term technical fair value for American Express. It's great to know where is the current short-term equilibrium price level. Here it is, all right. You can see there were few deviations from that orange line. Oops, have I moved the line? No, I did not, which is good. I don't want to move it. That's the orange horizontal line on my chart here. So here we are. We see a deviation from the short-term equilibrium price level, and then gently look at that, a pullback. So here it is come down again, down to the short-term equilibrium price level. Now it's galloping away, jumping up as a kangaroo, and then again a deviation. And then what do we see again? A pullback. So here again we can see that we have a significant short-term equilibrium price level, because many times the price deviated from it. It came back to that short-term equilibrium price level, validating the level of $62.22 as a valid current short-term equilibrium price level. So you see again a deviation on the other side. Again, one more time, you return to the short-term equilibrium price level. Sometimes the price may oscillate around the short-term equilibrium price level for a while before it may start a proper trend. But if the company is not creating more value, if the price action is not dynamic, all right, we may see that movement taking place for a long time, for few weeks, all right, for few weeks, until we have a new short-term equilibrium price level. Very, very powerful. Okay, so for American Express, the short-term equilibrium price level is $62.22. So how many stock how many components I've covered so far? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, and 12. 3 more. So the next component that we want to talk about is General Electric Corporation. The EPIC is GE, Golf Eco. This is another Dow Jones Index component, and the short-term equilibrium price level or short-term technical fair value for General Electric today, all right, is at $32.05. It's great to know. So we see a deviation on the other side below it. Will it pull back to retest it? If not, all right. If it's not pulling back, so here we can do something else. So then we see a deviation. Will it pull back? Okay. If it's not, so we can have a bit of idea what is likely to take place. So if there is a deviation, here we have a deviation, yes or no. So in our mind, we say that if there is no, added value, if there is no added value, so trading is about finding value, If there is no added value, the price may return to the short-term equilibrium price level, Now, if the company, in fact, so in normal condition, if there is no added value, the price will return to the short-term equilibrium price level. But suppose that the company, in fact, is losing value. Do you understand? So there is no added value, but it's now start losing value. In that case, what we need to see, you see now it's below it. If there was this deviation, if there is no added value, if there is also no loss of value, there's a high chance that the price may return to the short-term equilibrium price. But we can expect that, But then we can draw also a line here. So a deviation up to this point, $31.03. So if you lose in value, in that case, we'll say to traders, priority to bullish signal above 3103 and priority to bearish signal below it. Because if it start losing value like this, well, it will continue to go down, below 3103. Now, if no change has taken place, and no value has been created, then it will return to the short-term equilibrium price level. All right. Then, if you return to the short-term equilibrium price level, and then we have more value added to the previous value, which means the price, we have more value added, all right, the price may deviate again from the short-term equilibrium price level. And if this deviation to the upside is valid, which means supported by the fundamental, all right, the price may continue to go up. So here, if you look carefully, I know that this may be a bit complex to some traders because it's my own proprietary trading tool. So here we see a deviation, from the short-term equilibrium price level. And then it starts changing direction here. Here you see a deviation and then it starts changing direction. Just draw a line here. So when we were here, you would draw that line here. So you see deviation for the short-term equilibrium price level, high probability that the price may pull back to the short-term equilibrium price level, or it may continue to go up. So we will say priority to bullish signal above. Okay, you see the deviation up to this point when it starts changing direction. So we say priority to bullish signal above $32.95 and priority to bearish signal below $32.95. So if we are selling below, we are expecting it slowly but gradually to come back to the short-term equilibrium price level. In most cases, it will retest the short-term equilibrium price level. Sometimes it may not. Nothing is 1 + 1 = 2 in the financial market. Okay, so it doesn't matter which trading system you are using. Nothing is 1 + 1 = 2. It's always the same. All right, it's always. That's why we keep our eyes on the price. That's why we are using multiple time frame trading method to trade it. Once again, if we drop below it and then start changing direction, we draw a line. So where we are now, for this General Electric, priority to bullish signal above 3103 and priority to bearish signal below that level. So if you continue to go up, which means we see a bullish trading setup, we implement a top-down trading method, while everything is working well, in normal condition, it can go to retest the $32.05. But if it breaks below and retests it, well, we will sell it, okay? Next financial instrument is JP Morgan Chase and Corporation, EPIC JPM. Juliet Papa Mike for JP Morgan, okay, the short-term equilibrium price level is $62.62. All right, $62.62 for JP Morgan. That's the technical fair value for JP Morgan. This is not a fundamental fair value. This is a technical fair value for JP Morgan Chase and Co. All right, that level will remain in place for how long? 2 weeks or so. Then after 2 weeks, we may have a new short-term equilibrium price level, or not. If nothing has changed, we may have exactly the same short-term equilibrium price level, or just a bit of change. Okay, another short-term equilibrium price level that may be very close to the first one. All right. So now again, as you can see here, there was some deviation, a small deviation here, and then a pullback to it, and then a deviation to the other side, and then again a return to that key level. And here we are again, a short-term equilibrium price level. So you can see that now we have this current short-term equilibrium price level, and now we analyze what the price has done around that level. So suppose today you calculate the short-term equilibrium price level for JP Morgan, $62.62. Great. Now you want to see how the price has behaved around that key level in the past. This is what has happened before. That's what I'm telling you now. Okay, so the price deviates many times and return to that short-term equilibrium price level on both sides. Okay, many times. Now this is telling us that it's a significant short-term equilibrium price level. We don't want to forget it. So as a swing trader, wouldn't it be nice to know the short-term technical fair value for the financial instrument that you are trading? By the way, you may say to me, George, I trade the Forex. I have good news. Very shortly, I will also be posting at George Trio YouTube channel. Okay, a video when I will show traders, okay, I will select maybe 4 or 5 currency pair, and I will give traders, okay, the current short-term equilibrium price level for those currency pair. So if you're trading Forex, all right, don't worry, okay, but there is a channel for Forex trading. If you are a subscriber to for George Trio YouTube channel, subscribe also to 24 Forex Trader YouTube channel if you only trade Forex. All right, so our number 1 YouTube channel is George Trio channel. We have nearly 3,000 subscribers there. But you may say, George, I trade more Forex than anything else. Okay, don't unsubscribe at George Trio because you will find video useful from that channel. But also subscribe to 24 Forex Trader YouTube channel. Or you may say to me, George, I only trade stocks. Okay. Don't unsubscribe from George Trio YouTube channel because this is our number 1 YouTube channel. But go also and subscribe to 24 Stock Trader YouTube channel. Digit 2, Digit 4 Stock Trader YouTube channel. Okay, all right. So here it is. If you have any comments or suggestions, put in the comment section. In due course, I will be busy recording another video to answer your specific question. So for JP Morgan, what do we need to do? So we see again a deviation from the short-term equilibrium price level up to the zone of $66.24. So we'll say to traders, priority to bullish signal above $66.24 and priority to bearish signal below. If it's going down, there is a high chance it may come back back down to $62, 62. But it doesn't mean that definitely it will come back down here. You see here, there was a deviation, but as it's coming down, okay, it didn't retest the short-term equilibrium price level, which means probably they are creating more value. So if they found a support after this deviation, it tried to come back down, but it stopped here. So if there is a sell, I'm not saying sell. So if you are a new trader, what I'm saying here doesn't mean go and sell JP Morgan. I did not say that. All right. You want to pay attention to the price action. You want to pay attention to the market pattern. And then you want to apply a top-down trading method. All right. I'm not saying buy or sell. This is an educational tutorial talking about, okay, a Wall Street trader reveals the power of a proprietary support and resistance level, all right? Because trader has been asking me a few questions about my own proprietary trading tool, which I don't want to share a formula, but I can give you key levels like this, so you may also know the current short-term equilibrium price level. The last component for the Dow Jones component is Cisco. All right, so if you use computers, routers, Cisco Systems Incorporation, the EPIC is Charlie Sierra Charlie Oscar CSCO. The short-term technical fair value, talking about the Wall Street component, is at $29.66, $29.66. So now we know this level here, and we see a deviation from the short-term equilibrium price level. As a day trader, we will draw a line here, and we will say there is a high chance that it may pull back to retest the 29.66. Doesn't mean that definitely will hit that level, but if there is a deviation and the deviation is valid, the price has a high chance to pull back a bit. And the maximum can go all the way here. If it's still losing value, you go below it, and we project the height of the deviation. Oops. Okay. The height of the deviation, the height of the deviation, if it goes below it, to set the target below. But as we are here now, we will say priority to bullish signal above $31.06 and priority to bullish signal above it. All right, that's what we do. Then we don't assume anything. We are looking for trading setup, and then we implement a top-down trading method without violating the market patterns. All right. This is the end of this tutorial about the Wall Street trader reveals the power of proprietary support and resistance level. If you have any question or suggestion, put in the comment section, and in due course, I will be recording another video to answer your specific question. We are the TSTW24 trader talking about the Wall Street trader reveal the power of proprietary support and resistance level. In this tutorial, we were looking at the technical fair value of the first 15 components of the Dow Jones Index, or the Wall Street Index. Happy trading to you all, and speak to you soon.